Welcome to the Fixate on Real Estate Experts Live panel. Today, we are talking about turnkey investments, passive income building, acquisitions, how to build big-ass companies with some of the best, awesome, most coolest people that I know. Mr. Jay Scott, starting out with him. I am so happy he's with me every single week. He has nothing better to do at 12 p.m. Pacific Standard Time on Wednesday. And so that's why
I feel bad for you, Charles. Nobody else is willing to spend an hour with you every week. So somebody's going to do it.
You are a saint. You should be given a medal or
a raise
to the city.
You should give him a raise.
Exactly. Double my salary.
Double it.
You already have the keys to my heart. So let's continue this on. So I am excited to also have Miss Kathy Fettke here. She absolutely is one of the most beautiful investors out there and one of my favorite people. And the only reason I'm friends with her is because of her husband, Rich.
Thanks.
So,
And the crazy thing is she's smarter than she is beautiful.
Oh my gosh. Thank you guys. I really needed some love today.
All right. And then there's Nathan. So
yeah, exactly.
Getting on to the
and everybody loves me.
You can look at Nathan and know he's smarter than he is beautiful.
Oh yeah.
Did I just say that? I'm sorry.
Yeah. That's true. Okay. So we also have Nathan Brooks, our special guest for today, along with Kathy. So jumping into it today, we are talking about turnkey properties. I'm very interested to find out more about this because I don't know much about it. In my neck of the woods in the Pacific Northwest, nobody does it here. And it also is a loose term, like what is turnkey properties? To some people, it's a horrible like slang word, maybe because they had a bad experience. For some people, it's the greatest freaking thing in the world, right? So we're going to find out more about that. We're also going to find out how to start a business in that as well and what it takes to run an acquisitions business. Just on the one side, Nathan Brooks does 150 properties a year. So how the hell does that even happen? Kathy syndicates billions of dollars or millions or whatever. And also helps investors invest passively. So we're going to find out how that works. So if you're interested in today's topic and you're looking, how do I invest and become a passive investor? This is a great topic for you. And we're also going to go into how do I build a business to help other people become passive investors? We're going to go into that as well. Fair enough?
Are we going to talk about MMA? So for anybody that doesn't know, we got Nathan Brooks, who literally has been an MMA fighter. So if you have any questions about MMA fighting, this is the webinar to ask him on.
You can tell if you're watching this on the video, you can totally tell, right? That Nathan has definitely just got out of the cage not too long ago. So,
show those guns.
I have the tattoos and the cauliflower ear to prove it. So
yeah, he's got the cauliflower ears. Perfect.
Yes.
Yeah. Were you a wrestler at some point too, or no?
No, I was not. But it is definitely an interesting experience to get in a cage in front of a few thousand people and fisticuffs. And yeah, it was
and keep your teeth.
And
you
keep
kept your
my
teeth.
Yeah, I have them all.
Yeah, they're all fake, but yeah, they're there.
Yeah, exactly. I mean, they did a great job. The dentist did a great job.
So let's talk about Kathy Fettke. First off, our panel guest, CEO, co-CEO of Real Wealth Network. Kathy is a best-selling author of Retire Rich with Rentals. She is an active real estate investor, licensed real estate agent, and former mortgage broker specializing in helping people build multi-million-dollar real estate portfolios that generate passive monthly cash flow for life. With a passion for researching real estate market cycles, Kathy is a frequent guest on CNN, CNBC, Fox, Bloomberg, NPR, CBS, MarketWatch, Wall Street Journal. She is also named among the top 100 most intriguing entrepreneurs by Goldman Sachs 2 years in a row. Then we have Mr. Nathan Brooks joining us for the first time, CEO of and co-founder of Bridge Turnkey Investments, a Kansas City-based company renovating and selling more than 150 turnkey properties per year. Having more than a decade of experience in real estate investing, Nathan is a sought-after speaker, writer, and real estate coach. He regularly produces educational content to fuel his passion for helping other people learn about and finding success in real estate investing. He currently lives in Kansas City on his 11-acre property with his wife and 2 beautiful children, where he loves to enjoy the outdoors, train MMA, and come up with new business ideas to crush. And last but certainly not least, my good friend, Mr. Jay Scott, entrepreneur, technologist, investor, and advisor, host of the Bigger Pockets Business Podcast. Check it out. Author of 4 Bigger Pockets books, including the book on flipping houses, the book on estimating rehab costs, which is my personal favorite, a timely novel, the book on negotiating real estate, and recession-proof investing. He's a real estate investor that's completed 400 deals since 2008, including flipping, buy and hold, multifamily, notes, lending, development, new construction, closing on his first syndication in Houston, Texas. He's the man, the myth, legend, Mr. Jay Scott. Woo! All right. So today.
That's all you've done, Jay? I mean, come on.
And I've done a whole lot less than everybody else on this panel. That's the crazy thing.
I know.
I don't know about that.
Maybe.
I don't know about that either.
All right. So jumping once again into it. We are going to talk about turnkey passive investing as well as building out big ass portfolios for income for life. I'd like to start out every one of these since the world's kind of weird right now. I always like to say, what was life like pre-March 2020 in business, specifically now turnkey, and also what's it like now post? But before we get into that, I want to hear a definition, right, if there is one, of what is a turnkey property. What's a common definition of what one would be, and is there any kind of like myths, challenges, or anything revolving around that? I'm gonna let Kathy take it first, so that way we can set that definition, because I didn't really know what any of this crap was until yesterday. So let's hear what Kathy has to say first, and we'll jump to Nathan.
Well, here's the problem. There is no real definition for turnkey, so people have preconceived notions of what that means, and then they go to buy one and it ends up maybe not being what they expected. So it really comes down to what are your expectations, and being extremely clear about it, and making sure that the turnkey provider that you're working with is super clear what their definition of turnkey is, because I can assure you there is no general definition for turnkey. And if you bought a turnkey property in Columbus and then went and got one in Houston thinking it would be the same thing, you will be disappointed. So you've got to define turnkey, because there is no definition. Now, Real Wealth, we decided to define it, and we asked the turnkey companies that we work with to meet the expectations and standards that we have, so that we could have some kind of standard for this. So I hope that answers your question, that there is no answer.
Give me something. Like, I hear this word turnkey, okay. I'm like, what is the common?
What is the Real Wealth definition of turnkey?
Yeah, what the hell is it?
Well, so for us, our definition is most of our investors live out of state, so they're buying a property somewhere else that someone else needs to find for them, renovate for them, find the tenant for them, and manage it for them. So it's done for them. All of that side of it, the side that the investor has to do, they also have work too. They have to do their due diligence and manage the paperwork and the insurance and so forth. So it's not 100% passive. That's an illusion. It's never passive when you own property, regardless of whether it's turnkey or not. But the idea would be someone else is doing part of it for you, and defining what that part of it is. Generally, it's buying, renovating, and managing.
Okay, so simply the idea out there is, I'm a passive investor that just wants to put money into a property, but somebody else already renovated it, put a tenant in it, has property management taking care of it. There's an ROI attached to it. And in theory, I'm supposed to not even really worry about it other than put money down.
Well, that's the problem. That's a theory that will drive you insane because theoretically you should, but you're still the owner of that property. So you do still have responsibility.
Got it. And we'll dig into that more, because why that's important to understand as we get into this a little bit more. Nathan, do you have anything to add to that?
Yeah, no, I think that's good. And it's interesting from Kathy's perspective, because you work with all kinds of, providers all over the country, and many are mutual friends of ours. Right. And so just like many areas in business, there's lots of people, but really there's a pretty tight-knit community of people that do this and do it at a high level. And so I know for us, that was something really important, that we not only defined turnkey for what it was internally for us as a company. So like, what are to be in alignment with the values and the things that we expect. So like the quality of the renovation and the quality of the product that we deliver, and recognizing that there's two clients we serve. It's the tenant that's being placed, as well as the owner that's buying that home. And then, setting the expectations at the beginning of that. So here's what this process looks like. Here's how you're going to buy it. Here's how it's delivered. Here's what the inspection report looks like, as well as saying, to Kathy's point, this is a property. This is your investment. Something, things are going to break. You are going to have have the plumber out or whatever. And so to set the expectations, set it up to be successful for that person, and what does that success look like for them, and how can we help them achieve it?
Cool.
And Kathy made the point that it's generally out-of-state investors. So investors investing, I assume generally speaking, it's investors in areas that have really high home prices where renting won't necessarily make sense, putting money into places where it makes more sense, where the numbers work. I guess the question I would have is, do you ever find that people local to the properties in the areas where you're doing the turnkey investments are buying themselves just to save themselves having to do the acquisitions, having to do the rehab, so it's not always out of state?
It's not. No, it's definitely not. Local people do it too, because if you have a full-time job, and for many people, a full-time job is more than 40 hours a week, and then you've got family and you've got everything else going on today, taking care of, you're now a homeschooler, you're a hairdresser, you're a cook, you're everything. And right. So having somebody else just do what they do best, let them do that. And you just buy it. And oftentimes people find, even if it is next door, it's cheaper for them to go turnkey, because they're going to get an expert too, who knows how to cut costs on certain things, who knows how to oversee contractors who will totally rip you off every time if you're not looking, overseeing it. So absolutely. And what we found very interesting now is a lot of people who it used to be California. Our market has been mainly California and West Coast. Now we have a lot of East Coast. Now we're starting to see people all across the country buying all over. Like there's people in Kansas City that just decide they don't want to invest there. They're going to invest in Florida or Texas or whatever. So a lot of people are investing for whatever reason, in different places than in their own backyard.
I guess like one of the things that also lead to what you guys are saying too is just like, I was going to ask, why are there no turnkey businesses on the West Coast, right? For instance. And I mean, that's a good question. Like, and because where I'm from, I'm like, unless I was out there talking to guys like you or people like you, I wouldn't even know what the hell that business concept is, living in the Pacific Northwest in Seattle. So, and Kathy,
you would just be a turnkey provider for us. I would teach you how. We want properties. We want your property. You always keep them.
I want to dig into this later on a business side. I'll make more money not being a turnkey provider here in the Seattle market and the Tacoma market than I would be. I'd make less money if I was a turnkey provider. So what's the benefit? So on a business side, we'll go more into like, if you want to invest passively, like what the benefit is for you there and how to avoid like getting taken advantage of. But on a business element, like, why would I ever want to do that here in my market? And why do you do that in your markets?
Well, I can give you one answer to that. Again, your market's a little different because the cash flow is lower, but I've been pushing you to be a turnkey provider for us for a long time, and you just
no way it'll happen here.
So I can say that for many, let me give you an example of one of our typical clients in California. They bought a house for $500,000. It's a rental. Maybe they paid $750,000 or $1 million. And that has maybe doubled or tripled. I mean, this is the kind of mentality a Californian has is, oh, sure, I'll buy this $1 million property and make it a rental and charge $3,000 for rent, because they don't know anything different. And then when they find out, wait, I could buy 10 properties and quadruple my cash flow in a market that's growing and has better landlord laws, I think I'll do that. So the difference would be you buy a property and you retail sell it with one customer who's an investor. They might buy 10, they might buy 20. So it's just more volume.
And Tarl, think about it. You both flip houses and you hold rentals. I assume you flip some because you probably, it's hard to find enough money to hold them all. And the numbers don't always make sense holding them all. And you hold rentals because you like the cash flow. Well, a turnkey provider is kind of doing the same thing. They're flipping, so they're generating some buckets of cash up front that they can use to then continue their investing. But a lot of turnkey providers also manage on the back end, so they continue to collect cash flow. So it's very similar to kind of merging those two businesses together in some fashion.
I like the sorry to interrupt.
No,
I like the spirit of also, what does it do, not even in the short term, but also thinking about the long-term impacts, where people who, we have clients all over the US. We have lots of military clients as well. So literally somebody that's, deployed on a ship, we've sold, mini homes to people who, instead of coming home and, buying a truck or whatever, they invest their money. But, I love also focusing people where, hey, in some markets like California, whatever, you can certainly get this incredible appreciation, but think about your opportunity. You can buy now. The interest rates are ridiculously low. You can park some money that gets a great return, has cash flow, but also over that period of time, you're building this much bigger pool of wealth that will really be able to transition, whether it's, cash out refinance or selling them or having them paid off in a much greater cash flow. So I like looking at both of those things, where it's the short-term opportunity as well as the long-term.
So I guess what I was trying to get at too is that, like, in California, Seattle, high appreciating markets, here, our rental, like if I bought we invest a lot in Tacoma, right? So Tacoma, Washington's an area we're we've been in since 2012. Like, it's just our bread and butter. And before, it was one of the hottest markets in the US, right? Our rentals there, like if I went and rehabbed and sold one of my rentals there, instead of let's forget rental for a second, putting it one of my flips, right? If I would take one of my flips and put it on the market and try to sell it to a landlord directly, like a turnkey investment property would do, then I'd have to sell it for less than what I would sell it for to a retail client. And so
Right.
it's going in there. So
How much less?
well, what kind of return are people looking for, right? So like if you're a turnkey provider, what kind of return does your investors want, right? As a landlord, do they want like a 6 cap, 8 cap, 12 cap, 10, like whatever, 30 cap? And for what kind of return are they looking for? Because in our area, like if they want anything better than a 6 or whatever, then, they're not really going to find it, especially if it's a full, like already updated property. It'd probably be negative cash flow for most of them.
Well, I
So
think
most of the turnkey properties now are about that. And yeah, so it might be that your taxes are lower than in Texas, say, where they might they pay less, but their taxes are higher, so the returns are just as good. And remember, Tarl, you're selling retail, so your flips are gorgeous. It might be a different finish for a rental.
Well, and also people like different markets for different reasons. So I think just focusing on that is kind of also not giving full service to all the opportunities that are out there. There's a lot of different markets, a lot of different places people like for very different reasons. They grew up in KC, but they don't live here anymore, or they want to live in Florida in 20 years, but they're going to buy it now so that they have cash flow, or, they have a giant 1031. And so they want to buy in 3 markets, and they buy in Cleveland, Jacksonville, and, Memphis or whatever. So, I think to refocus the question around, people are able to scale in a really incredible way that gives them a good asset. And as long as they're clear on what they're actually trying to buy, and they can understand and underwrite the fundamentals of that market.
Yeah, I think the other thing to keep in mind is cash flow is really important, but it's only one of the fundamental ways we make money in this business. There's also amortization. There's also tax benefits. There's also appreciation. I mean, I can imagine there are a lot of people who would take a cash flow neutral property in your area, Tarl, knowing that in 10 years they're going to get a ton of appreciation, and in that time they're still going to get the tax benefits and they're going to get the principal pay down. So,
yeah, but why wouldn't I just put it on the MLS and see what happens?
You could, but then you're not getting any residual income, and maybe you're really good at acquisitions like Kathy and Nathan, and you've got too many properties
To put on the MLS? I'm only challenging only for my market. So like, this is just
your market's
these are
hot.
questions that like I'm asking us, like, I'm serious. Like, these are
Hey,
real
Tarl, just put them on the MLS.
Oh, cool. Okay, I'll do that. Yeah, sounds good. Okay, so enough of my questions, because it is, and this is the mentality of some of us have up here, especially in my market. It's just like, okay, why wouldn't I just put it on the MLS, right? And then why send it directly to the buyers? Why send it to that? Now, let's go talk about people that have markets and have lots of properties and have a business system for that. So you're in Kansas City, Nathan, right? You guys do 150 properties a year, right? Your typical business model. What's your typical business model from like a very 10,000 foot view acquisition to disposition system?
Yeah. So like what are the actual moving parts in my business? Is that what you're asking?
Yeah. Like 10,000 foot view, whatever, like just so people could get like, oh, that's a normal style.
Yeah. Yeah. So we have a couple people in acquisitions. So we'll underwrite deals, whether it's wholesale, MLS, direct to seller. We do really very, very little of that, but we'll underwrite that deal. We have a incredibly well built out Podio system, so we can plunk in the numbers, and in 30 seconds we know if we can buy it or not based on those fundamentals of return. And then we have 2 full-time estimators on our team as well. So one of the things we really talk about a lot is our time to target. So how fast can we underwrite that deal, get in that deal, and know that we can buy it? And, I preach all the time, we move it up or we move it out. And so, moving that through construction and, or estimation, right? So we basically have a full blown estimation by the time we're getting out of there. And so now we have a really clear handoff process to the construction, lay out the budget, and those guys run it. And at the end of it, we also have a inspection, third-party inspection, as well as internal review from our team, and then the property manager. So we're able to tell the client as well, like, hey, we underwrite this, we give you the entire scope of work. And that kind of goes to the point for what we were talking about at the beginning, is like, how does that client know what they're getting, and how can you make sure that it's so clear and obvious? So then, once the client is able to, select that property, and we have a sales and marketing department as well. So we have all the internal, between transactions, acquisitions, construction, and sales and marketing.
So when your process, like, so you guys source the deal, right? You guys source it through MLS, wholesalers, off market,
Exactly.
do you own everything, right?
Yeah, exactly.
Okay. So this is, I'm trying to say, like, okay, I'm going to be a potential client working with a turnkey investor. I come to you, I find out, okay, you found a property off market in some capacity or on market that was totally messed up, right? You fixed it up. You have a process for that. You know what's wrong with it. You did all the cool stuff, right? You have probably a standard of what your construction should be at, right?
Absolutely. Yep.
And then, so I know what I might be buying, right? And then, but when it comes to the disposition phase, do you guys put a tenant in it too, or no?
We do not have internal property management right now. So we have a property management partner in our particular business. There's a lot of, turnkey companies I know that do have their own PM company as well. But for us, that's not a focus right now. We wanted to do things that we do really well, and bring in a partner that does that really well. But another thing about our properties in particular is that we have the same standard of finish in every property. So you could literally look at one and see, internally, this is what it looks like. And so we're able to sell them over and over and time again before the construction is even done. We have ugly pictures because people know, hey, that's another house. It looks exactly like the same house, And so, then there's this kind of a standard of finish that the client comes to expect and that we produce.
Okay. So that's good for the client side. Then when it comes to disposition, and that's selling the property or doing what you do to put it in its permanent location, do you put that on the MLS, or do you reach out directly to your buyers list, or how does that work?
So for us, we used to put a lot of them on MLS just so we could have the comps, and a lot of times we would be setting, high comps in the area. But for the process through all of that, we found that it was just a lot more effort than it was worth. And so we do not put them on MLS. We sell direct for sale by owner to our clients. And so we have a list, not nearly as big as the giants of Real Wealth. You guys have an incredible source of leads and such, but we have a really religious group of clients, which is awesome. And so we're able to just basically sell directly to our clients in our particular process.
And I think that's partially the answer to your earlier question, Tarl, which was like, why would somebody want to do this on the operating side? These days we can put our flips on the MLS retail and sell them in 3 days. But what happens when the market's softer? I mean, think about 2008 to 2013. We put our stuff on the MLS and we wait 90 or 120 days and we hope a buyer comes along. Kathy and Nathan have this list of people that are waiting for their properties. And so, I think different models work better in different parts of the economic cycle. Their model is going to be great when the market starts to soften.
I guess like one way to think about it then is that, like, you have a buyer's list. Let's say you're a wholesaler. Wholesalers do this all the time. They have a buyer's list, right? So, and they know if they're a good wholesaler, they know what their buyers want, and they tie up a property under contract, and they know, well, I can sell it to these guys over here, and I don't really have a good relationship with them. They may or may not close. And maybe they're going to beat me down on my assignment fee or whatever. But this group over here, they always close. I know what their buying criteria is. I know what they want, and I'm going to deliver it to them, and they're going to be happy. And so kind of on the turnkey side, you have your buyers, you know what they're going to buy, you know what they like, right? And you know what they're going to deliver to them. They know what they're going to get from you, and it just simplifies the process. Is that kind of what I'm hearing? Or
Yes, that's exactly right. I thought you were talking to Kathy as well. I didn't want to take all the time, but yeah, absolutely. And I think that's the thing. What we've said too is, in kind of relating to the question of selling them at retail or not. And you could also argue, hey, if we're selling our properties at retail as well, there's 3 to 6% typically in those transactions as well that you're paying, right, or closing costs and credit to the buyer and all those things. And so we don't really have that, none of those things.
Mm-hmm.
And we've told the clients from the very beginnings, like, hey, we've priced it at retail. You're not overpaying, but you are paying what it's worth. And 93% of our properties last year appraised at or above, and we had more that appraised literally above the sales price than under. So it's one of those things for us. We have a really clear exit. And we also know that we only buy stuff that we would keep ourselves. So as we're buying and as we have these opportunities, we buy and hold in the same areas, and now build and sell and hold and sell and hold them in those areas as well.
Cool.
I have a question for you guys. Do you also help your buyers with financing? Do you have relationships with local banks or local lenders that you help your buyers through that part of the process as well?
For sure. You really do need a specialist in investment property, because most real estate agents and most mortgage brokers are focused on primary residences, and it's just different.
Mm-hmm.
And they need to understand, I think, the neighborhood and understand investment. So we have a list of, 4 or 5 lenders that our members really love and have worked well with. Oftentimes when they just go to the local bank where they live trying to buy a property out of state, it ends up just being a nightmare.
I guess that's one of the, like, if you are okay, so for those of you guys listening to this right now and watching us right now, depending on how you're viewing it, it seems like if we get a lot of people that we run a lot of events, we run a lot of webinars, run a lot of in-person stuff, and we get questions all the time. And these are people that work full-time jobs, 40, 50, 60 hours a week. They make good income maybe. And they're like, I want to go do a BRRRR, buy, rent, rehab, refinance, repeat, or whatever, right? And I want to buy like 2 or 3 of them. And I'm like, cool. Have you ever flipped a house? No, right? And like, why do you want to do any of that, right? And it's like, oh, because I want the rental side and I want the passive income. I'm like, okay, do you have the time to do all the construction and rehab and manage and source the deal and do all that kind of stuff with your job, full-time job at, in our area, Microsoft or Boeing or whatever it is? Maybe not Boeing soon, but anyways, for all those aspects. And they're like, well, how much time does it take? I'm like, okay, a lot, right? And so,
and it's not just the time, by the way, it's also the expertise and having the systems.
Building that out. But
by the way, just to your point, we have had more clients come back and say, I tried to do that, and gosh, I got my butt kicked on this thing. And if I would have just gone through you guys in the first place, I would have actually had less money invested and a lot less headache from doing it, because you have somebody who actually knows what they're doing and does it at scale.
So let's get an actual item here. Like, the actual item for anybody watching this is that if your goal is to invest passively, quote, quote, that's a loose term, in real estate and build passive income for yourself, and you have money to invest, but you don't have the time to deal with all the BS that we all deal with, right, as a business, then this might be a viable option for you. Is that what we're pretty much trying to say?
Yeah.
Oh, absolutely. I mean, even if you have all the time in the world, it might be a viable option, because don't try to do something you're not good at. That's the key. And Jay will tell that all day long. You hire people to do things that are better at it than you are. Now, if you are a real estate agent, you know how to find deals, you know how to look at comps, you know how to look at a house and work with an inspector and make sure you know exactly what needs to be done and what doesn't, and you're taking on the risk that once you go behind the wall, there's something there you might not have expected. What do you do with that? And then if you know how to interview potential tenants and manage them, and you know all the laws of that state, then do it by all means. We have people in our network who prefer to do it themselves, and we might just help them with property managers in those areas. But most people don't know that, or they might know it in their own neighborhood, but not 1,000 miles away or whatever. So I can tell you in my own family, and it always is with family, right? We have a family member who was like, what, I just rather do it on my own than through my family. So that
runs a very successful business that teaches people how to do this on a regular basis. Sorry,
they were just like, no, there's certain people that do just like to learn on their own and learn their own lessons. And my family member is now learning a big lesson because they had to actually fly out. They bought a property on their own through the MLS, tried to fix it themselves, to get their own tenant. That tenant ended up never paying. They didn't know how to do the proper vetting of that tenant, and the property was destroyed. So they both have had to fly across the country. It's on the other side of the country, and live there for a month to renovate this property. So tell me that's a savings. It's not. They've spent way too much, and not to mention they bought in a terrible place in a tenant friendly area, so they couldn't even get the tenant out. Now, if you're in California trying to invest somewhere else, one of the first things you look at is landlord laws. You don't go to a place where landlord laws are worse than California. That's a bad idea.
Yeah. So I guess so another reason why, and then I also want to switch into the operation side, but so we in my market and also the West Coast, right? I'm very used to that. I've lived in the West Coast my whole life. California, I'm born and raised there, right? Now I live in Seattle, and I have a 1031 coming up, right? I think I mentioned this the other day to you guys, but I have a 1031 coming up, right? And I have a bunch of equity in it, right? I could 1031 into another property here locally. I'm only cash flowing $300 a month on this thing. I got 140K in it to move. That's what that's casino money in my head because it was a burr, right? And so I'm like, okay, I just want to increase the cash flow, right? I could buy one more single family home, right? With that here, right? I couldn't buy a duplex, right? Because I have to do at least I sold the property for 360 in Tacoma. I'm not gonna buy a duplex with that anywhere around here unless I just buy it for 600, 700, 800 or whatever. So it just depends on if it's fully renovated. So unless I want to do another burr, right, with it, that needs to be worth more. Or I can go, I just want to increase my cash flow and move on with my life. Then I go into potential turnkey with a good provider somewhere else that could find me 2, 3, 4 properties somewhere else.
At least, by the way.
Huh?
At least 2
At
or
least,
3 or
okay.
4. Yeah.
I want to talk about that for a second. Because why the hell are all the turnkey providers in the middle of the US? From my experience at least, are there or somewhere on the East Coast? So if I'm going to invest in Kansas City, let's not just also talk about just your business, Nathan. Let's talk more
sure.
Globally. Right? Properties don't appreciate as much as they do here, right? So, but cash flow, I guess, is the thing. How do I know as an investor that I should invest in Kansas City, or I should invest in Ohio, or I should invest in that city? What should I be looking for to make sure that the economics are there? I'm out of state, right? I know my market, and I'm in a little bubble in my market. Nobody out of Seattle leaves Seattle for investing. It's just kind of weird here. But how do I know I want to go to Cleveland. Why Cleveland? Or I want to go wherever, right? So
I think there's 2 ways you can look at that to start. You either say, I'm going to start with the provider that I trust and has the same value. They deliver the kind of product. Maybe you want something that's kind of has some value upside, but they carpet and paint, and you're cool with that. Or you really want this kind of specific, you want new construction or whatever. Or I think the other side of that is you could say, you look at those market fundamentals. So what's happening in that area? Is there, an increase in, is there low unemployment? Is there a growing population? What is the size of that population? What are the taxes, insurance, and rents and the values? And so we underwrite the financial fundamentals of those things, and then you can kind of start to build out, because at the end of the day, you're not living in it, right? This is not a home you're going to go live in. And so does it meet the criteria for what you want, which we started the question, right? What are your expectations? That's what Kathy said. So what are your expectations? And then where do you go to have the provider and the property that will provide that?
And then, so Kathy, then I'm coming to you, right? Or whatever, or you give advice on this all the time. I want more cash flow with my money, right? So that's more important to me right now than appreciation, right? It's just but I also want it secure. I don't want to invest in some city that all of a sudden goes belly up, or the economics don't support the rentals there for long term, because maybe it's just it's one business is supporting that area or whatever, or it was a local college, right? Nobody's go back to school. But what are you advising as far as markets? Are there any markets you're advising in right now for people to go rent in and go look for?
Yeah, absolutely. Well, we have a turnkey rental fund. We're probably one of the, there's hedge funds that do that too, but we also help investors build their own funds, their own portfolios. What we know from demographics is the largest demographic shift is moving to the Southeast, which is mainly, Florida, Alabama, Georgia, Texas, the Carolinas. It's especially the no state income tax states. And especially, you asked kind of the changes between January and now. These shifts were already happening. They just accelerated. Many people were from New York and from big cities were thinking someday when I have my nest egg, I'm going to move to somewhere where I have more space and maybe where there's a beach nearby that I could swim in and great weather. And now they're doing it. So, it's everything. The only thing that's changed for us since January to now is our whole plan is accelerated. So that is one thing. But because we, as a fund manager and also helping individual investors build their own portfolio, there does need to be a little balance there. So what a lot of times we've done and other people have done is said, I think I'll do a few properties in this growth market of Florida where I'm going to get a little bit of lower cash flow, but probably pretty good appreciation based on demographics and what's happening. But I want to offset that with some cash flow properties in Ohio or Kansas City, where I can maybe, get a little more cash flow and potentially less appreciation. The funny thing is, it hasn't been that. Our properties in the Midwest have appreciated faster than any other area because they were so cheap to begin with. And now what we know is building supplies are going, the cost of building supplies are going up, the cost of labor, the cost of permits, everything, we're going to be dealing with inflation. So these markets where there hasn't been appreciation, that could change. I bought a property in Ohio for, $45,000. It's $110,000 now a few years later. So to say that there isn't appreciation in those markets just isn't true. I think there will be, but so we balance it.
I'll tell you where there isn't appreciation right now, right? So for those of you guys watching, listening, you can quote me on this because it is in the Federal Housing Finance Agency comes out with the housing price index every quarter, right? And you can look it up, type in housing price index, right? And it's a cool report. I was really curious what was happening in the second quarter because that's when most of the lockdowns were happening. Well, it's basically ranks the top 100 markets in the US, which is most of the major cities and so forth, right? The worst markets, the absolute worst markets with the lowest appreciation in the last 12 months is San Francisco, the worst, negative 0.32%. Quartered in the quarter was negative 0.18%. San Jose, Oakland, the top three worst right now, all with extremely low or negative appreciation. And then you also then have like New York, New Jersey, right, area as well was in the top 5. They're number 5. And you have Baltimore, these are all Detroit, these are all bigger markets, right? That some of these, except for Detroit, might have been big on appreciation. And that's why you're buying in those areas. And now they're actually either stopping or going negative in some capacity.
Detroit had the highest appreciation in the country for a long time because it was just so cheap. But not Detroit proper. You kind of have to go into the suburbs. That a lot of times that data is misleading because they're talking about a metro area where we don't typically buy in the metro. We're in the suburbs. I'm guessing that's true for you too, Nathan.
Yes, that's absolutely right. And it's been pretty interesting. Well, Detroit's a cool market, and actually, there's a great provider in Real Wealth in Detroit, and actually downtown Detroit is pretty cool now. By the way,
it is pretty cool, and
I actually love it there. But I think it's appreciation KC. It's been this steady 3-4%, and kind of looking at other friends who are I think
the city is ranked number 12 right now for the last 12 months.
What
interesting?
Kansas City?
Yeah, top 12, right? So number 12, saying that the average appreciation over the last 12 months is 8.29%. Last quarter 2%, which is on track for 4 quarters of 8+%.
Wow,
it's insane. And you know what? Kansas City right now, and I know this is not about KC, but I know the most about KC, so forgive me. But we have the lowest historical number of homes on the market in the MLS ever recorded in Kansas City, 1.5% months of housing supply. And actually in your market or close to it, I know the Southwest, I forget what the MLS is called there, but I was looking at that. I think Collier County in Florida had 4.5 months of properties on the market. And it's so bonkers what people are paying. And when you see these low interest rates, which by the way is great buying your turnkey house right now, because you can lock that sucker in at, we've had people at like 3.5% on an investment property. It's absolutely insane. And by the way, you can also scale beyond the 10 homes in turnkey as well. And I think a lot of people struggle with that because they read, oh, I can only do 10 homes, Fannie, Freddie, or whatever. But, there are alternatives. You can do portfolio loans and so forth.
How do you meet people that have 100 rentals, right? Like, it's like there's Fannie, Freddie, just for everybody listening, Fannie, Freddie is like beginner level investing. So that's the real, you eventually start getting to portfolio loans and all this other crazy stuff that's out there. So it's, but you utilize those are tools for sure. So
absolutely.
By the way, to address Nathan's, this is just a little piece of information I learned since moving to Florida last year. He was talking about Collier County and 4 or 5 months of inventory. So I live right near Siesta Key, which is a popular beach, and Collier County is near Naples, Florida, which is a very wealthy area. Yep. And what I found is that there are a lot of people that own these $5 and $10 and $15 million houses that the day they buy them, they'll list them for like $1 million or $5 million or $10 million more than they bought them for. And the house will be perpetually listed. And they never really have any showings, but if somebody like makes them an offer, they can't refuse. So when we see these really high days on market in this area, it took me a while to figure that out because I couldn't quite figure it out. That's the reason, because there are these people that have their houses perpetually listed, just waiting for an offer they can't refuse.
Isn't that crazy?
Yeah.
So I'm going to get some of the questions here just to get put this one to bed, because we've mentioned the housing price index on the Zoom. Here we just so everybody knows, disclaimer: don't go shut down everything you're doing and jump into these markets because the housing price index says it highly appreciated. Do more research, right? So trust me, please. It's also, this is the second quarter, which means it was the end of June, and we're now in September, and a lot of this stuff's happened in the last 3 months, right? So it's retroactive data, plus also there's a lot more shit that you got to look at before you just sell everything you got and move to someplace.
Well,
definitely buy Kathy and sorry.
I was going to say, you want to own the assets already before it hits that list. So you need to know exactly why you're going to be buying cheap. And then you're going to be, you don't want to buy in the number one appreciation market, because that means it already happened. It's the people who saw it before it happened who are going to make the money.
Correct. Rear view investing, like, don't be that guy, right? So, but to answer the question that we had from one of the listeners, Honolulu was number 1, Boise number 2, Tacoma, my neck of the woods, number 3, which Tacoma was number 1 for a long time, but the Seattle at one point was number 1, the Phoenix number 4, North Carolina, Greensboro number 5, Tucson, Tucson is number 6.
You notice how I just drank, Charles? I have this rule: I drink every time you say the word Boise.
Yeah, I know. I've been really looking at Boise actually a lot. But enough about that. So I guess, like, all right, so if I'm going to go look at a market, let's recap that really quick. I'm going to look at a market to invest in passively out of state. I don't live there, right? What are some key indicators I should be looking for to invest in a market that I'm not in? Kathy.
So the main things we look for is, number 1, job growth. That's really tough to do right now. So that would normally be what we look for, which also is population growth. But we're seeing kind of a different, population growth is probably a more important demographic because a lot of people are retiring and don't need a job. So, where are those people moving? And of course, it's going to be more affordable areas that have a nice climate. And that's, like I said, the Southeast. So job growth, population growth, typically. And the third one is affordability. And that's where people get confused a lot, because they'll look at that list and say, I forget what was top, Honolulu, probably tough to find an affordable rental property there. So they may have job growth, or San Francisco. I've lived there all my life. So there's always population growth and job growth, but not a great place to, not affordable. So you have to have those 3. And then the fourth, that is what I was saying, to get there before the rest of the world, before it makes the list. You want to see what kind of investment is happening in that area that nobody knows about yet. So, for example, we jumped into Detroit when it was still just had a horrible reputation. I mean, it's not like it's got the best reputation in the world, but right after it went bankrupt, people were like, stay away from Detroit. But that was the time to go in, because the city just let go of debt. Yep. And then could reinvest. Then 2 billionaires came in and invested billions each into revitalizing that city. And we were all over that, buying stuff for super cheap. and then it appreciated quickly, which isn't really appreciation. It's just a bounce back to normal. So the fourth thing being, what is the city doing? What's with the investment in that area? Is the city investing? Are there new roads, new freeways, new buildings coming in? And are you in front of that? Like in 2005, when we chose this little city outside of Dallas, it was not on the map. No one knew about it. People laughed. I had old time investors just like poo-pooing me, like you're sweet, but nothing's happening there. But we knew a freeway was going in there. So we bought these cheap little properties for $140,000 in this little town called Rockwall that 10 years later, those properties are $400,000. Now, most of Texas doesn't do that, but because there was a new freeway coming in and these were lake properties, we knew that was going to happen. So, yeah.
Awesome.
I'm going to add,
Good summary.
Yeah, affordability and infrastructure development.
and I'm going to add one more just because I'm probably more conservative and risk averse than a lot of investors, but I really look for employment diversity as well.
Yes, yes.
You definitely want to see, you don't want a town where there's one employer. And I kind of break this rule because I invest in some military towns. And it scares me because if the government starts shutting down military bases, doesn't look like they're going to do that anytime soon. But if it happens, I'm screwed because there's really not much other additional industry or business in those towns. So just from a risk perspective, employment diversity is an important one.
Love it. So we're going to jump into some more questions, get some Q&A from the listeners here in a moment. But before we do that, I want to tell everybody, because here's the coolest part about this panel, in my opinion, is that all of us are going to be at the Big Badass Virtual Wealth Expo happening September 18th and 19th. And in fact, Kathy and Nathan are flying into our studio specifically for this, except for Jay, because he's a jerk. So that said,
I have a family birthday. I have my son's birthday. Otherwise, I would be there.
It is going to be the greatest virtual wealth expo for real estate investors all of this year, for sure, hands down. We've invested a lot of software tech into this, and we put a lot of effort into it. We have 40 plus speakers. Brandon Turner is going to be one there. We got Ken McElroy is going to be there. We have a bunch of other keynotes showing up. Of course, Nathan, Kathy, Jay, they're going to be there. You can network with these guys virtually there. We're going to have specific virtual networking sessions just with them. And we're also going to, of course, have 40 plus sessions of content. You can even network with each other as attendees. As attendees, you could sit, I'm not talking about like your text messages to these people. You could set up your own virtual meetups where you can host, like, I want to talk to all Kansas City investors and we want to talk about fix and flip. You could set that up yourself as an attendee and get people to go to that. And you could go network with Kansas City investors that want to talk fix and flip virtually, just like this through video. So there's so much you can do with it. We have exhibitors, we have resources, we have guides. It's going to be 2 awesome days. Even if you can't make it, you get all the recordings. You also get 20%. So you get 10% off right now. If you do F.O.R.E 02 as a discount code, that's good until Friday, just because you guys are live on the webinar. If you also buy your ticket, Bigger Pockets is now a proud affiliate of this event. So they're going to be giving out some awesome cool shit. One of the things that they get is that if you go buy your ticket through us, you can get 20% off the Bigger Pockets Pro membership because you buy a ticket with us. So awesome thing from Bigger Pockets. Thank you for that. So go to badassexpo.com or go to pnwrealestateexpo.com. Both work for us. And buy your tickets now before the ticket price goes up. Ticket price goes up September 11th, right? So the evening of September 10th, it goes up. And it won't be as cheap after that. So go check out the speaker lineup. It's coming out even more. The agenda's busting up there. It's going to be some really cool stuff happening those 2 days because we can't do in-person conferences right now. Woohoo! So, but this is going to be better. So I would not have done this conference if it wasn't for us figuring out the networking component. And we were able to figure that out. You guys are going to be blown away by it, have a lot of fun with it. You can talk to Kathy, talk to Nathan, talk to Jay, all those guys, as long as they want to talk to you back, just like a real conference, right? So don't forget that. So you can just walk up to them randomly and talk to them. If they don't want to talk to you, they don't need to. That's the same thing here, right? So they have to want to talk to you, right? That's the other part. But but I'm sure they want to talk to you.
I'm sure.
Yeah.
Sorry.
Everybody wants to talk to Kathy.
I want to talk to you guys too.
Yeah, so go to the website for the ticket price to go up, FORE 02 for a discount before Friday night. Cool. And then Nathan, of course, you're going to talk about how to evaluate acquisition properties very quickly. And because you guys have to do so much all the time.
Yep.
Kathy, you're going to be talking about syndications and how to be a badass. And then Jay Scott and his wife Carol are going to do a joint presentation on how to basically, what was the title of it again, Jay?
Top 10 tips to become a better negotiator in 1 hour, or however long you're giving us to talk.
Yeah. So that sounds awesome. And then, of course, we have all the other speakers you guys can see on the website. So let's get back to this. I actually like this question. Kyle is asking, what are the pluses and minuses from your perspective between doing a fully rehab turnkey property versus build to rent?
You want to go first?
You go ahead and I'll add to it.
Okay, cool. So we've been doing turnkey stuff for, about 6 years, and doing it real estate stuff, 10, 12 years myself personally, but as a business, Bridge Turnkey, we're going into our 6th year. But we just started building middle of last year, and we had our first properties roll out of the factory, so to speak, here about 2 months ago. And so we're holding both. Personally, we're holding build to rent as well as the renovated properties. But what we're finding is that we have a slightly lower rate of return on paper, but we have a brand new property. We know all those CapEx and maintenance things should be significantly less for a significantly longer part of portion of time, as well as looking at what the appreciation potential is, especially as we've been finding and understanding better areas to build. So, and just from a straight up wealth building, I like, having those, and especially if you're going to hold them for a long period of time. So that's what we've looked at.
Yeah. So it's usually more expensive and lower cash flow on new builds. I mean, who wouldn't want a new property, right? And that is definitely the case. I mean, we're actually going to do a whole series on new builds at Real Wealth, on webinars that we'll be doing, because when I started, it was all new builds. And then, the market collapsed and there was all foreclosures on the market. So it's always about what the market is telling you and what's the best deal at that time. Right now, there's a tiny window where it's almost the same, because values went up so much on older properties that it wasn't that much more to buy a new property. And in some cases, it was cheaper to buy a newer property. So it just depends on the deal. What we are finding is it's still almost the same. So if it's almost the same, get the new one, and a lot of our turnkey, teams are also building new properties because they are finding these infill lots. So it just depends on the numbers. If you're going to be in a part of town that is really hot, really good, and all you can buy is older homes, that's still great, as long as the big ticket items have been taken care of. And that is super important. That's why, like, back to our list of what turnkey means, we expect at least 5 years left on the roof. Again, the big ticket things, the expensive items need to be new no matter what on a turnkey. Because that's going to kill your cash flow. A lot of people will buy an old property and think, oh, I got such a great deal, until they have to replace the HVAC or the roof, and it's not so great anymore. Now you could have just bought a new property. So either way, certain things need to be brand new: electrical, plumbing. Nathan, you'd be able to address that. But if you could buy totally new, that's really fantastic. And like I said, it's a short window of time, because lumber just went up 18%. It's supposed to go up 45% by, November or something like that. So what we know for sure is inflation's coming, and it's definitely going to be hitting new builds. They're going to be more expensive. So if you can get them now based on what lumber cost a few months ago, you're going to make equity right there.
I like that you said that too, because that's something that, like, I don't think especially with the build to rent, your capital expenditures are like, what are those, right? And so after you're done with the building it, right? So we do that. We found that as not on purpose when we did our first few BRRRR rentals, right? Is we just did everything we did on a normal flip, which was replace the roof, replace the electrical, replace the plumbing, because we do everything, and we have no maintenance repairs, no capital expenditures ever on pretty much any of our rentals, because everything's brand new. So I guess that would be even 10x when it comes to a build for rent is that you could just almost remove that from your, at least initial analysis, right? When it comes to it, because you already did it, right?
We still highly recommend, I mean, there's a few things you have to know about buying new build, because again, it's expectations. People are like, I don't have to do anything. And that's just not true. A lot of times the new home builder will have a warranty for 1 year or 6 months or whatever. So we always say, get your inspection right before that warranty is over. So if you already bought the property and you've had it for a year, still go get get a second inspection so that the builder has to fix it. Things like that. I hate to say it, Nathan, because you don't have to fix you, but if that warranty's there, use it. Also, make sure you understand that, what comes with that new build. Like I said, does it come with appliances? Does it not? That's going to affect your cash flow. I bought a new property once thinking I got such a great deal until the tenant moved in and there was no fridge. And by the time I got the blinds in and the fridge in and the washer, all this stuff, I was way upside down. So.
Yeah, just like everything else in real estate, things go in cycles, and there are parts of the cycle, the real estate cycle, there are parts of the economic cycle where replacement cost, the cost to rebuild from scratch is going to be higher than the cost to just buy something, existing inventory, and fix it up. Then there are going to be other parts of the cycle where it's just the opposite. It's cheaper to rebuild from scratch than it is to go out and buy an existing home and fix it up. And right now, like Kathy said, material costs are going through the roof. Contractor costs are going through the roof, and replacement costs are just are far exceeding what it costs to buy a house right now. And that's and just buying an existing house right now is really expensive. So that says a lot. But that answer may change. I mean, if you would have asked that same question in 2008, 9, 10, 11, 12, the answer would be different than if you asked it in 2017, 18, 19, 20.
You'd be crazy to buy a new home in 2009 when you could buy almost the same home for 25% of that,
Yeah, exactly.
Yeah.
Agreed. Awesome. I miss those days.
I know.
But then again, like hindsight's 20/20 too, because like most of us were like terrified too. So like, let's not forget that, or broke, or bankrupt, or foreclosed on. So like, so
many good deals and no money to buy them, right?
So I remember paying extreme interest rates to, anyways. Okay, so a question from Israel is, are you all seeing investors utilize rent guarantee insurance in their business given the current economic climate? What are your thoughts on this type of insurance, like rent guarantee insurance?
We do see there are some out there. I've kind of told people don't totally rely on it because I don't know, Nathan could maybe answer that, but it's out there. I don't know how much it's actually been tested. So it needs, I would just rather see people put aside reserves for vacancies, at least 6 months of vacancy, have it in a bank account, expect it, it will happen. And then you won't be so shocked when it happens. But again, I have seen people buy the insurance. I'm just not sure how much it's been tested when that vacancy happens. Nathan, do you know?
Same, absolutely the same. That's absolutely the same. We talk about it, and don't go into it hoping, go into it knowing and having that conservative underwriting and put that money aside and be prepared. And so that I agree 100%.
I also want to throw in there that insurance, right? I would assume maybe some insurance providers might have adjusted some of their binders that basically are like new disclosures or whatever that say, yes, we guarantee it unless it's COVID related, right? So watch out for that, because trip insurance is that way, like all that stuff. So.
Oh yeah, exactly.
Absolutely.
Like that's why I never buy trip insurance.
Yeah. Jay, you had something? Or?
I was just going to say, since COVID started, I've had 2 companies that have come to me that are getting ready to jump into this business to ask me to kind of be involved in some way, shape, or form. And one I said no to. The other one I asked to see kind of their actuarial tables and kind of like their margins and see how they actually did things behind the scenes, because I was curious. And I was tremendously surprised to find that they're running pretty thin. I don't know if it's standard for all these companies, but if they're indicative of other companies out there, I wouldn't be surprised if we see a lot of these companies struggling over the next few months with, and it could be like Nathan says, that they now apply a lot of caveats and disclaimers and say, we're not going to necessarily cover certain things. But I wouldn't be surprised if these companies start hitting some tough times pretty soon.
Part of what happens. So, okay. Let's see. Matthew's saying, what are the key things to look for in a property manager when investing from afar?
Great question. I'll just give a few and then Nathan jump in. Experience for sure. It seems so easy, right? Just collect the rent. It's not. So make sure
A local realtor said he's a property manager.
2 years minimum experience. You want to, from that experience, know how many houses do they manage, how many evictions have they handled. You want to see that they've handled some, but not a ton, because if they have a ton, that might mean that their screening process isn't that great. But what is their screening process? How do they identify a good tenant? What kind of background checks do they do? And do they, I mean, those would just be a handful of questions I'll throw to Nathan.
That was good. I agree. Everything she said. I also just want to know what is their vacancy like. So, how many units are currently vacant, and what is the timeline to turn them? What's the average cost when they turn them? And then also understanding the actual financial fundamentals as well. What does it cost to place a tenant? What does it cost for the monthly management? Do they nickel and dime you on repairs? What's their philosophy of how they do their, is it in-house maintenance, or do they have a third-party provider? So I think, and again, kind of speaking to that first question, the expectation, like you have somebody that's super hands-on. What's the communication like? How do you find out, are you getting some sort of communication each month, or is it all automated? And then you can really set the expectation where maybe they do a great job, but they don't communicate that much, or it's all digital trail versus get on the phone or shooting you a personal email or whatever. So, kind of understanding how they operate.
And we do have a list of 20 questions to ask a property manager that's free on the resources page at Real Wealth. Along with that.
Is it realwealthnetwork.com?
Well, Real Wealth Network is so hard to say. We actually finally are just realwealth.com. We got that. We got it. There were some people that got that URL and then tried to pretend they were us. So there was a whole battle, but we won.
Oh, geez.
I was going to ask, but I'm not going to. How much did that cost you to get that URL? But yeah.
A lot of money. Yeah, a lot of money.
So
I have property managers in 3 states, and so number one is exactly what Nathan said, which is communication. I'm big on good communication, but also from a fee standpoint, aligning incentives is important to me. So most of my property managers charge a fee to place a tenant and some sort of fee to renew a lease. But I want to know that, like, if a tenant leaves in less than 12 months, if they break their lease, that they're not going to charge me again for the next one. I don't want them to have an incentive for the tenant to break their lease every 6 months and then collect a new fee for placing new tenants and things like that. So aligning incentives on fees to having long-term tenants and well-maintained properties is really important to me as well.
So is that normal? Like, cause in our market, a lot of property managers just do a flat fee per month for rent collection with no tenant re-ups, no sourcing the initial tenants, that kind of stuff.
So I've seen between 40% and 100% of a month's rent is standard, anywhere in there, to sign a new tenant. I don't know.
Is it normal to have the opposite, where they just say we just take 10% of the monthly every single month, no matter what? Or
I think
they do that in addition.
Oh, okay.
And it's a philosophical difference too, right? So if you have a company, there's a bunch here in KC, right? And some are, half a month's rent, but the monthly is a little bit higher, or there's a flat fee. And, especially as you get the upper end properties that, you could save a significant amount of money on that monthly, but, what are the services that they offer, and how do they place those tenants, and what is the scale of their business, and what is their staff like too? You might have, it's a flat fee thing, but man, it takes 10 days to get somebody out there to, fix a maintenance issue or something. So, I think it's an all-in question to really understand both the financials and what comes behind those financials, and what in the terms of communication and service.
go on Google and see the reviews for the property management companies. A lot of times it's reviews not of the owners that use the property management company, but the tenants. But that's going to tell you a whole lot of what you need to know about how well they manage the units and the relationship they have with their tenants, because you want your property management company to have a good relationship with your tenants, because that's the thing. They're the front line. They're the ones that are going to define if you retain those tenants or if those tenants decide to go somewhere else. So I'm a big fan of looking at the Google reviews and the Yelp reviews for property management companies and seeing what the tenants say.
Love it. All right. So then let's talk about acquisitions really quick. So we haven't gone into this too much detail, but one of the things, Jay, you brought this up yesterday when we were all together, but so if you're running a turnkey business, we kind of talked about at the beginning, I think I make more money if I just put it on the market, right? But in my market. But if you're running a turnkey business, you have overhead. You also have demand from your buyers, right? You have to deliver products. Like you actually have to. Like Kathy probably has clients that buy from you, Nathan, in some capacity, right? So like she's like, you can't just send me one house, bro, right? You got to send me more. So how do you, in this market in particular, with COVID going on, like how do you keep up with any kind of demand to keep any volume up for finding acquisitions today?
Multi-million-dollar question, Nathan.
It sure is. It sure is. Do you want me to take a first stab at that, Kathy, or?
Yeah, because it's hard, right?
Well, you do.
I just want to stand up for Nathan, because people are like, what? I'm gonna have to pay retail. It's like, do you know what it takes to even acquire it and then fix it up and keep it under retail? It's so hard right now. It takes really extreme skill to be able to even find property today, let alone get it cheap enough to be able to renovate it.
It's 100% true. It is a challenge, and there's no question about it. And it seems like every month I think that, hey, we're going to have an influx of properties, and actually, no, it's harder. And some Yahoo will go pay 97 cents on the dollar or something on some property. We were outbid $22,000 on a house, not that long ago, a couple weeks ago. But so there's two sides of this, right? There's the acquisitions from on the buy side, and then there's that kind of sales on the sell side. And from the acquisitions, we just really be clear with your buy box, and it affects both your team on the acquisitions as well as who that client. And so, if there's properties that are in similar areas or similar price points or similar rent rates or whatever, the more clear in alignment everything is as it comes out of that factory, the simpler it makes it in every aspect, whether it's acquisitions, construction, transactions, sales, and marketing. So, we just talk about that and having a really clear buy box. And I tell my team all the time, I think I already said this, but faster to yes, faster to no. We want to understand exactly what it is that we buy, and we know how we did to do it. We have a Podio system that spits out a number, so we know what the returns are for the client. We know what our returns are for us, and a couple other metrics that we review. And then, from the client side, I think one of our responsibilities is to say, hey, you as a client are not playing HGTV. You do not get to pick the colors. You do not get to pick the street. You do not get to pick whatever. The thing that's important to you is, did we do a good job? Is it in a good area? Does it have the returns that you want? And is this thing that we produce as a company fit for you as the client of what you're investing in? And so we learned early on that, people are like, hey, can I pick the paint color? Or, hey, do I get to help influence who's the tenant that's placed? And you're like, hey, we're not going to be a good partner for you. And legally you can't do that, by the way, but the property manager needs to do it. But how can we make it so clear and simple of what they're doing, and whoever that operator is, that it's very obvious how it works, and it's repeatable.
Yeah, but I got into real estate to express my artistic expressions and all that stuff into.
Girl,
I want to pick finishes.
You would love, of all people, would really, I'm not trying to persuade you, I am a little bit, but you only, when it comes to turnkey property, the buyers are looking at numbers. They do not care about anything else. And if they do, they shouldn't. It's about the numbers. And that's really nice. It takes the emotion out of it. Whereas when you're selling retail, it's the floor plan has to be just right, and the colors and the this and the that. And our investors, of course, they want a nice house, but most important, good solid bones. But even more important is this attractive to a tenant? Will they want to stay there? Will they want to raise their family there? Is this a good place for them such that they will, it's their home? And then they'll stay there a long time. My Cleveland guy has been there since we bought it in 2005. Same with Pittsburgh, because we buy in good neighborhoods where they want to live and stay, and there's not high turnover.
The other thing to keep in mind is, I mean, we think about flipping and rental properties and other things, which is mostly a real estate. It's mostly like real estate, and then there's some business aspects to it that you have to be good at as well. But when you look at turnkey is more business than it is real estate. I mean, you have customers that are involved literally from the beginning of the project. These customers are going to be involved until basically the day you stop managing that project. Your tenants are your customers. And so it's a lot more business than it is real estate, unlike a lot of other strategies in real estate. And so if you just want to be a real estate investor and that's where your skills lie, well, you're probably not ready to be a big turnkey operator. You need to be a good business person also. And at least I'm not in the turnkey business, but that's my take looking at it from the outside in.
Understood. All right. I want to wrap up here. I'm just going to circle back on this one because it is a good question. I actually have this question. So we had mentioned earlier with looking what markets to invest in, what kind of research you can do. Kathy, you had mentioned what kind of investments are going into that area, right? You brought up Detroit. There's other markets as well. Like I joke best, like, where's Walmart getting built, right? Or whatever. And Ashley's asking, where can you research or even find out in an area what kind of improvements or potential investments? Where would somebody look if they want to start digging into that data?
I mean, I can tell you where, some of the things we do. At this point, it comes to us, which is really helpful. A lot of people will tell us what's going on in their cities in hopes that we'll, want to work with them. So, but you can go to the Better Business Bureau, get to know the city planners. They'll tell you what's going on and what they're excited about in their cities. They're marketing their cities. So find out what their plans are. And all this takes a lot of work. So one easy way is that, and I don't mean to self-promote, but I'm going to, we've done a lot of that and summarized it and put it on our site, what businesses are moving to these areas and what freeways are coming in and what infrastructure. I mean, a big thing, love them or hate them, what's the president doing? Where's the money going for the infrastructure projects he's been talking about? And it is being assigned right now. So investors who want to get ahead of that, listen to him. So I say, love them or hate them, listen to them and find out where that money's going, because it's gonna have a huge impact on that area and real estate in those areas.
Yeah, so, get off of Twitter, stop looking at the news, go do some real research, right? Yeah. If you're gonna invest, right? And not social research, but like real research on an area, what's gonna happen. So put your emotions aside and just become an objective investor.
Be an objective, I love that. Yes, it's like where is when the government's investing in an area, federal, state, local, pay attention. And then when you add a few billionaires in there, like pay attention. Who's investing? That's why opportunity zones are exciting, because it's like, whoo, lots of money going into these areas. Maybe I'll just buy right there, even if it's not in an opportunity zone. That's what we're doing in Florida, in this little town that's outside of Tampa. It's an opportunity zone. We know tons of money's going in there. We're just buying right around it.
Love it. All right, last question. So let's see, what is the one thing to not do ever? Or what's the best advice for what not to do when either investing in turnkey or two, becoming a turnkey provider? Or any other random ass advice that you want to give, that's fine too. So let's go Jay. I know, just give the random advice, Jay. It's okay. You're not a turnkey provider. I get it.
My biggest piece of advice is know your goals. I think too many people in real estate, they start doing something, but they don't know why they're doing it. They're not thinking through it. They don't know. I mean, I like to use the cliche or the analogy. Basically, if you get in your car and you ask me for directions to go somewhere, but you don't know where you're going, nobody can give you directions. And it's the same thing in real estate. If you don't know what your end goal is, there's no way you're ever going to figure out the best way or a reasonable way to get there. So I encourage everybody that's starting out, sit down and really think through what your goals are and your timeline is, because that'll really help you figure out the best way to get there, and whether turnkey is right for you, or flipping is right for you, or rentals is right for you, or syndication, or any of the 100 other strategies that are available to you in real estate.
All right, Kathy.
What not to do, and I hate to say this, I do, but most people are good people, and most people trust other people. And let me assure you, any industry that involves investing other people's money is fraught with fraud. It just is. And I've met every fraudster out there, I'm telling you, and they can look you in the eye and shake your hand and lie to you. So if you don't think that's true, look at what's happening today. There are people out there who have no problem lying to you. So never do business on a handshake. Me, as we have 50,000 members in our network. When we work with a turnkey provider, they get an enormous amount of referrals. Usually when I go to them and say, I'd like to buy a property, I would assume they're going to take care of me. I have had people who didn't, because I trusted instead of verified. I literally bought some properties through turnkey providers thinking, well, they're going to take care of me because I'm going to tell everyone how great they are, and found out I bought a complete dump because I didn't do my research and I was too busy to do it. So, that I'm telling you, you got to, go through the checklist, have a checklist. What are the things, background checks on these people? For sure, that's easy. It's like $20 to do a background check. Even just a Google check, find out there's people who have bought with, I won't say the provider, but there are providers who it's very quick to search on Google that they have not treated others well. So and then beyond that, make sure always you get an inspection, third party. Don't take the inspection report from the person selling you the property. Do your own third party inspection, third party appraisal. I've had people come back to me and say, hey, I bought this property a year later and the foundation's bad. Well, what did the inspection report say? Oh, I didn't get one. Well, how do you know that it happened before or after you purchased? You don't. So, there's just basic ways to protect yourself. So to summarize it, don't trust people, verify. I wouldn't buy property even from Tarl without doing my due diligence, as much as I love him.
Well, F you, whatever.
I think you guys laid it out perfectly. So I'm just gonna put the bow, especially, we got two great perspectives, which was both kind of the high level as well as the details, and which is funny, from the detail person gave the high level and the high level person gave the detail. But anyway, I really think that I can't agree more, Jay, that so many people just look at like I kind of make fun of it, like the hustle sign, and like we're gonna be the entrepreneur. I'm gonna sit in front of my F.O.R.E, and I'm gonna have all the big house and whatever. And at the end of the day, I can tell you, after flipping hundreds and hundreds and hundreds and hundreds of houses and doing tens of millions of dollars of transactions and owning, building my own portfolio, helping clients, it's like the more simple, the more clear, the more focused, the more consistent, boring, and reliably repeatable thing that you can do is what wins. And, I want to spend more time with my family. I want to spend more time with my buddies. I want to spend more time with my son out fishing, and all the things that we talked about today are how to set you up to do that. And so make it clear. And I tell clients all the time, it's like, you're going to have a goal and next year it's going to change, and that's okay. You might want more, you might want less, you might want more cash flow. You might be, thinking about appreciation. Fine. Make a plan and come back and look at it and revise it and obsess about it. And that's where you put that time and energy.
Great advice. Love it. All right, guys. So we're wrapping up. And actually we wrapped up. So Nathan, how do they get a hold of you?
They can check out either connect with me on Facebook, just literally Nathan Brooks, or connect with our team, bridgeturnkey.com. And we'd love to help anybody if that's something that'd be wanting to invest in KC. And it's not even public yet, but we have a couple other things coming very soon.
Which you can find out more at the Virtual Wealth Expo.
Yes. By then we will definitely have that announced. So it'll be cool.
Kathy?
realwealth.com. and the Real Wealth Show podcast. And then I did write a book called Retire Rich with Rentals that you can get on Amazon. And there's a checklist on there, which is the most important thing. Just always follow the checklist. It's easy to forget things, right? So.
Jay Scott.
Please check out the Bigger Pockets Business Podcast. My wife and I co-host that podcast. I'm on Facebook, J Scott Investor, Instagram, jscott_123flip, jscott.com, or feel free to send me an email if anyone wants to reach out, j@jscott.com.
And you can find me at the badassexpo.com, so virtualwealthexpo.com. And also you can find me on Instagram at Tarl Yarber. I'm the only one. And right now, if you go to my Instagram account, all you will see is pictures of my baby and also my ropes course that we just built in my backyard.
So cool.
Which Nathan and Kathy are going to be enjoying.
It's going to happen
after the Virtual Wealth Expo, which we will live shoot that for people that are watching this now. If you guys want, we'll probably broadcast that Sunday, September 20th. And I have a pretty dope ass ropes course in my backyard, 35 foot in the trees.
No question.
Kathy's husband, Rich, helped me put the first two foundational beams up into the trees a couple years ago. And Kathy even drilled one hole, right? So it was good.
I really did. And my name is on that board.
It is signed by Kathy on that beam supporting it. And I'm not going to say exactly what it says on it, but it's pretty funny. And they will be enjoying it 35 feet up in the trees right after the virtual conference. And it's
awesome.
So follow us on Instagram. Also, we do this every single week. So next week, we have another panel for you guys. We're going to be talking about raising capital and funding next week. So check that out at Fixated on Real Estate Experts Live. And we will see you guys. FORE02 is the discount code for 10% off. And any last thoughts from anybody here?
Just thanks so much for doing this, Tarl.
Yeah, thank you.
Stayed steadfast in your education. It's awesome.
I'm just excited to be here. These are like my three favorite people in real estate.
Yes.
Amazing.
Better than everybody else. So, all right. Thanks, guys. We will talk to you guys later. See you guys next week.
Bye.
See you guys. Thank you.